everybody, and welcome back to another episode of Real Estate Investing Q&A with Antoine Martel. I'm your host, Antoine Martel, and so how the show works is people DM me on Instagram their questions about real estate investing. I answer them on the show, then I send them also the link to the show in the Instagram DM so that they can go subscribe, check out the show, and see what I answered to them. Then I'll cut up these clips and put them on Instagram as well. So if you want to go check out my Instagram, it's at Martel Antoine. If you want to ask questions for me next show, it is at Martel Antoine on Instagram. Check me out, follow me there, and then you can DM me your question so you can get your question answered on the show as well next time. So let's start. We'll typically do 5 questions depending on the size and length of the question. So let's start with the first one. All right, so question number 1, can you give us a list of real estate books and business books you have read from the very start of your amazing real estate journey? And this question comes from Eric. So a list of real estate books. So I think the most important book that people need to read is from Robert Kiyosaki. It's Rich Dad, Poor Dad. That's probably the most important book that I have ever read about real estate investing. Another book would be Multifamily Millions. That's a good book about multifamily, why multifamily real estate is so important. And then also I came out with a book, A Millennial's Guide to Investing in cash flowing rental properties. That's on Amazon. You can just search my name at Antoine Martel or Antoine Martel on Amazon, and that book will come up and you can purchase that book as well. That's a good read about how to get started in real estate with very little amount of money. Bigger Pockets also has a bunch of different series of books about the BRRRR strategy, buying rental properties, flipping houses. I would definitely check that out, biggerpockets.com. All right, question number 2 comes from Cam. When you partner on a building, who's on the deed? An LLC that is funded 50-50 or both individuals on the deed? Are you buying houses in Memphis? How much are you looking these buildings? So when you partner on a building, who's on the deed? An LLC that is funded 50-50. You can do it that way. There's a bunch of different ways to do it. So typically how we fund our deals or fund our joint ventures with our partners is that my LLC will buy the property, and then I'll sign a joint venture agreement with Bill, and Bill will sign a joint venture agreement with the company who's going to be on title, my company, and then he's going to pretty much give us his funds. We'll manage the funds, manage the project, and we're on title. He will have a lien on the property sometimes. Sometimes it's just that joint venture agreement. It really depends on the investor and what their risk tolerance is. So there's a bunch of different ways that you can do it. But that's just one example for funding a joint venture. Another way you can do it is both of you will create a brand new entity. That new entity will buy the property. You guys can create a shared bank account or whatever the case is. Really just work it out with your investor that's looking to fund the project with you. Ask them what they're comfortable with and see if you guys can make it work. All right, question number 3 comes from M. Stifler. Do you flip and buy and hold or just one? So good question. So every property that I buy, I look at 2 exit strategies. One of them being flipping the property. The other one is holding it and keeping it myself as a rental property. So every single property, I'm looking at both of those. I want to be happy if I flip it and make a good profit. I want to be happy if I keep it and keep it for cash flow. So every deal, I'm looking at both of those numbers. If both of them are a yes, then I move forward. If one of them is a no, I evaluate the other deals in my pipeline if I need to do a deal right now. If one of them is a no, typically I'll just say no to the deal. You have to have that abundance mentality to know when to get out of it. All right, question number 4 comes from NM Toronto. Does the market need to be hot to do the BRRRR strategy? No, the market doesn't need to be hot to do the BRRRR strategy. I'm doing BRRRR strategy in Cleveland, Memphis, Birmingham, St. Louis. These aren't really hot markets like Austin or Nashville or Dallas or Atlanta, right? They aren't super hot markets like that. And you don't need to be in super hot markets in order to even invest in real estate. I prefer to be in the markets that I know are going to be hot in the next 5 to 10 years and staying away from the markets which are hot right now where everybody's dumping their money. I much rather prefer to put my money into something that's worth $100,000 right now and hoping it's going to be worth $500,000 later than buying something for $300,000 hoping it's going to be worth $400,000 in the next year. That's a much riskier play than the long-term play in buying low with a long-term idea. All right, last question for this episode comes from Andy. Been watching your stuff. Awesome work. Thank you. I live in California as well. I have a business here and I'm looking to invest out of state. Had a question for your podcast. How do you see large bedroom houses in Memphis used as rooming, boarding on Airbnb as a profit versus long-term rentals? Seems the profit would be fantastic if you can find something close to downtown. So the issue with Memphis is that, contrary to what people think, the downtown is actually probably one of the roughest areas of Memphis. They have this little street called Beale Street, and that's pretty much all that's good of downtown Memphis. Everything south and north of it is very rough. A lot of boarded up homes, so that's why people see they want to invest in Memphis, they go look at the properties around downtown because everybody wants to be downtown, and then they quickly realize that it's the hood, and you can buy properties for 15 grand, a couple blocks away from downtown. It's ridiculous, and it has a long way to go. So buying those properties that need a ton of work right close to downtown, thinking you're going to Airbnb them, there's no way in hell that anybody's going to stay at your Airbnb. If you want to do that in Memphis, I would focus on Midtown. Midtown has a lot going on, except that then the houses are very expensive, so it's going to be much harder to Airbnb. Doing Airbnb in these markets, like these tertiary markets like Memphis, Cleveland, Birmingham, St. Louis, are hard within themselves, just because, first of all, they don't have a lot of tourists, and then if they do have tourists, they don't all go to downtown. They may go for certain occasions or certain events, so it becomes really tricky. It's not like a market that has blown up. Just like I answered in the last question, you want to invest in a market that's up and coming and on its way up, so you can get in early. But if you invest in like a place like Austin or Nashville, those are great places to do Airbnb now, but you couldn't do them 10 years ago because nobody was traveling there and doing stuff like that. So you really have to time the market. Airbnb, I don't think, would be right for these tertiary up and coming markets. It'd be much better for these A-class luxury markets, where you can buy something maybe on the outskirts and Airbnb it or renovate it and rent it out. So that's the final question for this whole episode. Thanks so much for watching. If you want to go and get your question answered on the next episode, head over to my Instagram at Martel Antoine, and I'll answer your question on the next episode. Subscribe down below. Thanks.